time for Wave 3 Listens Live on Kentuckiana's first live local TV talk show, all hosted by John Ramsey. This is Wave 3 Listens Live.
And welcome to the Monday edition of Wave 3 Listens Live. Hope you had a fantastic weekend. Wouldn't it be nice if every day was a weekend if you were retired? Well, we've got your roadmap to retirement with Brookstone Financial, the founding partner. I guess your founding partner, your managing partner, right, Seth? I want to get this right.
Well, actually, John is founding and managing partner.
Okay, so I'm okay either way.
Both would be accurate. Yeah.
Seth Stewart is with us once again, folks, and we're going to talk about a number of things. But I'm going to, first of all, I'm going to get off script if you don't mind, Seth.
Okay.
Okay. You told me a story, and I thought it was fantastic, and it really kind of uplifted my day. I was having a tough day for various reasons, but you told me a great story about your son who was very nervous about making this, like, it's kind of like an all-star team, isn't it?
Oh, man. Yeah, one of the best travel teams in southern Indiana, and probably the two longest days of my son's life. He had an invitation to try out for a local baseball team called Thunder 9U, and, you know, I'm just so thrilled, so excited for him, John. We got the call last night, and he was invited to participate in the team. So yeah,
isn't it nice when your kids succeed? And, you know, they work hard, and obviously he has worked hard. He's nervous about it, and he wins, because sometimes it doesn't go that way. So good for him.
Yeah, it makes you so proud as a parent.
I don't blame you. I can see it, and I love that. Okay, let's talk about what we're going to talk about. First of all, we're going to have a weekly feature here, and I think this has great value for both you and I, as far as the interest rate, current interest rate update. So we're going to call it the weekly interest rate update, and Seth is going to deliver. All right, Seth, how are we looking now?
Yeah, John, actually, interest rates at Brookstone Financial are looking on the up and up. You know, we have money markets currently at 0.80%, which from a money market standpoint, that's not a bad interest rate, 100% liquid checkbook access. 3-year fixed annuities at 2%, 5-year fixed annuities at 3.25%. And let me tell you something, those 1 to 5-year maturity bonds, those yields pretty much speak for themselves, because those are some great yields on bonds in such a current low interest rate environment. So yeah, we're going to revisit interest rates every week to give that short interest rate update.
Now, with that kind of yield on bonds, and I think everyone agrees that interest rates will eventually go up. Is that the time maybe to pull some of that now and go, okay, I've made some good money here, and maybe you should reinvest? No?
Yeah, John, good question. And we're going to talk about the correlation between interest rates and bonds a little bit later. But short-term maturity bonds, as long as you're holding them to maturity, probably positioned well. Bond funds, on the other hand, again, we're going to revisit that just a little bit later on in the show and talk about that correlation.
All righty. And I know we're also going to talk about annuities once again. And Seth, we've touched upon annuities a little bit, but I want to make it clear. Brookstone Financial does not push products. It's more like options and what fits for you and what's right for the current economy, correct?
Yeah, we're problem solvers, not product salespeople, and I think that sums it up. You know, we're not interested in selling products, and I think that's what really catches people, you know, off guard a little bit when they come in to see us. They assume that we're going to talk about annuities, we're going to talk about mutual funds or stocks and bonds, and you know, when we're really ultimately talking about having a comprehensive financial plan, something that will give you the highest probability of accomplishing your goals in the future. Maybe a piece of that plan is an annuity, but maybe it's not, John, and that's the important part.
All right. Now, I know we're going to discuss annuities a little bit today. And what is the focus of today's news? We're going to talk about hybrid annuities. We're going to talk about fixed annuities.
Yeah, we're going to talk about fixed indexed annuities as an alternative to fixed income or bond allocations. And, you know, first of all, I want to start off by talking about a dilemma in retirement, and I call that sequence of returns. And if we could go over to this graphic here, I'd like to point out what we're likely to see in the market, obviously, John, is a lot of volatility. You know, hopefully, all in all, we see more of an upward trend. Now, when you're investing in a 401k or putting money into your employer-sponsored retirement plan, these points here, these low points, are actually beneficial to you because this is referred to as dollar cost averaging. You're actually buying things when they're on sale by catching these low points. But there's a transition when you move from the accumulation phase of life to the distribution phase or in retirement. Now the rules that were working for you can easily turn around and work against you. Because, John, let's say you're taking money out here, or here. That's dollar cost averaging in reverse, and now you're potentially forced to sell when things are on sale, and that could be devastating to the outcome of your overall retirement plan.
Yeah, and if you want to maximize your roadmap to retirement, an expert like the folks at Brookstone Financial could actually, do you all predict or do you follow all of the whether it be interest rates or annuities or whatever it happens to be, and then you can kind of predict with I would guess some accuracy about the future in annuities?
Yeah, I mean, John, ultimately nobody has a crystal ball, or mine stopped working a while back. But ultimately it's about having a plan. Everyone's situation is different, and when you look at annuities, I mean, you look at fixed income, you say, okay, the likelihood that interest rates are going to rise in the future is almost factual. I mean, there's very little downside. There's an inverse relationship between bond prices and interest rates, and again, we'll go into more detail on that later, but we're using fixed annuities as an alternative or maybe a replacement for your fixed income portion of your portfolio. And we actually have another graphic, a rule that we start with. It's called Rule 100. And I think that this is very important when you're getting into retirement, because Rule 100, I want you to look at it this way, John. Let's say I'm sitting with someone, they come into the office, they're 60 years of age. Well, I take 100 minus 60, that gives me 40. What this tells me, and this is a basic starting point, is that 40% of that client's portfolio, it's okay to take a little risk because that's your long-term inflation hedge. With the other 60%, we want that in a safe, secure environment to where you can't lose money. But in the past, again, a traditional broker looks at this allocation and says, okay, we're 40% stocks, we're going to put 60% in bonds or bond funds. And again, the writing's on the wall that interest rates are going to rise, and as interest rates do rise in the future, John, those bond funds are set to be hammered. I mean, they really are.
Sure. This makes perfect sense. So we've talked a little bit about annuities. You talked about stocks and putting against each other. To me, I guess my question is this. This is why you guys are problem solvers, because for each individual, it's probably a little bit different. If someone comes in, I mean, what are the other variables or options that you give them? Since you're not selling products, you mentioned stocks, you mentioned annuities, some of the other options that might be available. Yeah,
real estate trusts, real estate opportunity, phenomenal opportunity in commercial real estate right now. We love the healthcare sector of commercial real estate. Another sector of the real estate that we really enjoy, or see a lot of opportunity in anyway, is the hospitality sector. And we have a conference call actually coming up later on this week. Love to have the viewers out there participate in this call, because we have a very, very exciting announcement, big merger going down. It's only a 10-minute call. It's Thursday, February 26th at 6:30. You can call our office at 288-9000. Go to the website. You can RSVP for that call. Interesting thing about this merger, though, this big acquisition involves a very large property in downtown Louisville that everyone on the call would be familiar with. So,
okay, interesting.
Yeah, you want to be on that call.
So you're on the call, and the call is more educational? And you can just decide if you participate. There's no cost to be on the call?
Yeah, there's no cost to be on the call. It's 100% educational. We don't take questions and answers, and that's just simply because everyone's situation is unique, and we don't know if this would be a suitable investment for you at that point. But obviously, it's a great opportunity to hear a little bit more information about this exciting merger and exciting opportunity we see in the hospitality sector of commercial real estate. The nice thing about hospitality sector of real estate is they have the flexibility to adjust weekly rates. Because think about this, hotels, when you're traveling, they're not in long-term triple net leases. They're pricing things out on a daily basis. So as we see a more inflationary environment, they have the flexibility to adjust those nightly rates. So it's a great inflation hedge and a great position to consider in your portfolio.
All right, more with Seth Stewart coming up, Brookstone Financial. What position does your son play again?
He is first base, actually. Hopefully he may even be pitching this year too, but I'm really excited for him.
I'm excited for him too. All right, more with Seth Stewart, more with Brookstone Financial. We'll be right back on Wave 3 Listens. It's the Monday edition. Welcome back to Wave 3 Listens. Kingfish Restaurant, great food and great information. If you would do the play-by-play for us there, Seth.
Yeah, John, IRA Legacy Planning Workshop. A large part of what we do is protecting and preserving our client's estate, but second to that is passing it on effectively and efficiently to the next generation. That's what we're going to be talking about at IRA and Legacy Planning. Kingfish, that is March 12th, March 17th, and then out in Madison, Indiana, Clifty Falls, March 5th, March 10th. You mentioned last week the view from Clifty Falls, phenomenal.
I tell you what, Madison, Indiana and Jeffersonville, Indiana Louisiana with a view of the river. Okay, I don't know which option I want. Okay, where's the food best? You've probably eaten in both locations.
They're both really good. They're both
you're
great.
good.
Yeah,
you're
yeah,
good.
they're both great. The views are both, the views are very similar, views of Ohio.
But I think this is a good way to get folks involved a little bit. It's just information, IRA, legacy planning, great restaurants, and a chance just to meet you guys, chat a little bit. Right?
It is.
Like
it's very informal. A lot of questions, a lot of answers. Hopefully a lot of answers. That's the idea. But love to have all the viewers out there. As John mentioned, there's no cost. You have nothing to lose and everything to gain. Great meals at both Clifty Falls and Kingfish. So we'd love to have you out. Just call the number there at the bottom of the screen if you'd like to RSVP, or visit the website at Brookstone Financial.
All right. I think you had some other graphics to show us, and you're
John,
good at this. This is interesting stuff. And thank you for not going over my head with this, Stuart, because that's too easy to do. So.
Well, we try to keep it simple. Yeah, the old adage, KISS. We've been talking about the inverse relationship between interest rates and bond prices. Think of a teeter-totter on the playground, right, when you were kids. Where are interest rates right now? Well, John, interest rates are near all-time lows. They really, literally have nowhere to go but up in the future. So with interest rates being at all-time lows, that puts bond prices currently near all-time highs. Okay, so the likelihood that interest rates are going to rise in the future, it's almost factual, if anything. So as interest rates rise, we're inevitably going to see bond prices fall. When's the best time to capture gains? When the market or your prices are near all-time highs. So, bond funds at this point, in my opinion, are a losing proposition. So I would consider taking those gains off the table and looking for other fixed income alternatives that are not correlated to interest rates. I think that's a much safer position to be in at this point in time.
I would think specifically right now, because everyone said the trend is going up. It's going to happen. That's inevitable.
Yeah.
So it's like, how long do you wait? You don't want to be behind the curve, correct?
You don't. There's very little downside to interest rates right now. So, with that being said, they have nowhere to go but up. So consider other fixed income alternatives, and that's when we get back to these annuities. And I'm not saying annuities are for everybody. Maybe they're right for you, maybe they're not. But we're about as unbiased as they come. We're licensed across the board as brokers, investment advisors, as insurance agents. So, people often say, aren't those annuities bad? And when I hear that, I say, okay, who told you an annuity was bad? Well, it was my broker. Does your broker offer annuities? Well, probably not. So, you get people pointing fingers back and forth in the industry, and it's unfortunate because the only person that suffers is the client.
And vice versa. You could have someone who's just pushing annuities, and you're saying, wait a minute, did he tell you about some of these stocks that are available? I like the fact that Brookstone Financial problem solvers. I think that says it best, and each individual is different, and I think also each mindset is different. Some people tend to take more risk, others more conservative. Is that correct?
They do, and everyone's risk tolerance is different. So, obviously that's a very important aspect of making any recommendation moving forward. This last graphic, though, I'd like to show you is one of the alternatives to fixed income investing right now that we're considering for our clients, and it is called a fixed indexed annuity. The interesting thing about this type of annuity is the red line. Let me point out, the red line is the S&P 500. Okay, here's the big downturn of 08, downturn of 09. People lost their shirt. What happened to clients in this type of annuity? They took a zero. But I say, zero's a hero during those 3 years. I would much rather retain my principal. Now, the trade-off, John, in that safety of principal is that you only get a portion of the upside. You can see the big rally back in the S&P here in 2011. You only saw a portion of that rally if you were in the annuity. But here's the key. Because you didn't have to make up for all this lost time or this lost principal, you could be potentially much farther ahead. So it's really something you should take a look at. Maybe you've looked at annuities before. We are independent, so we don't work for any one company. We work for you, the client. So if you'd like to download this report, we have a great report on our website at brookstonefinancial.com talking about using annuities as part or a portion of your retirement income plan. Go to the website right now, download the report. It's absolutely free. And you can also actually find the conference call information we referenced earlier about the commercial real estate investment.
Seth Stewart, you have admitted as a founding and co-partner that you're a numbers guy.
Yeah,
but you have an entire team. I think that's important because your specialty is numbers and breaking down numbers and trends. But some of your other team members, if you would, what kind of things do they accomplish when they're in the office?
Things like Medicare supplements. John, we talked last week about Social Security. And the Social Security Medicare decision, they really go hand in hand. Age of eligibility currently for Social Security is 62. Age of eligibility for Medicare is 65. So you're facing a very similar decision at a similar stage of life. So we talk about Medicare supplements, one relationship, team of professionals, estate planning, life insurance and legacy planning, IRA planning. You know, again, you can't be an expert in all aspects of this industry. There's just too much going on.
All right, if you're looking for dinner at Kingfish, I want to throw that graphic up again real quick because it's good information. It's absolutely free. If you'd like to go to Kingfish in Jeffersonville, or if you'd like to make that short trip, beautiful trip, to Madison, Indiana, hopefully the snow gets out of the way before the date on your screen, and it should, and then we'll be fine and dandy, right? And what kind of information? Again, this is IRA and legacy information, is that right?
Yeah, John, there's actually some new rules that went into effect in 2015 regarding IRAs, and we're going to be talking about that, and you need to be aware of these new rules. They're IRS-imposed rules. You don't want to step on a landmine that we would refer to as a landmine, you know, cause yourself unnecessary taxes or even a penalty. So attend these workshops, one or the other. Kingfish, March 12th, 17th, and Clifty Falls, March 5th and 10th.
Seth, I would think in the ever-changing economy, a lot of variables are changing. I would also think it's a continuous educational process. You guys probably have to keep in touch and make sure that, because with new rules, new procedures, new mandates, all of these kind of things, you keep a track.
I'm so glad you brought that up, because we spend a lot of time, we do a lot of client events throughout the year educating our clients, and not only opportunities that present themselves, but also the educational aspect of investing. I mean, we want you to understand what you own and what you're invested in. You'd be so surprised at how many people come into our office each and every week and they lay down this pile of statements and they literally have no idea really what they're invested in. So I think it's very important that you understand and you feel comfortable with how you're invested.
All right, and speaking of investments, coming up here shortly when we come back and return from the break, we'll tell you about that big investment call, commercial real estate announcement you might be interested in. I know you are. And we'll be right back. We're going to play the trivia game too. Could mean free lunch for you. We'll be right back on Wave 3 Listens with Brookstone Financial. Welcome back. Many reasons to go to Brookstone Financial website, and I'll give you one of those in a minute. But first of all, let's give you a chance to win some free lunch.
So, John, we're talking about fixed annuities today. A fixed indexed annuity with a 70% participation rate would credit what if the index increased 10%? $25 gift certificate to Orange Clover Restaurant if you have the correct answer.
All righty, just give us a call, and if you have it, yeah, there you go. There's the number on the screen, 888-800-9283. First correct caller wins free lunch at Orange Clover. Okay, Seth, what's the specialty at Orange Clover?
The broccoli slaw. You got to try the broccoli slaw. If you've never been to Orange Clover, it's actually right around the corner from our Jeffersonville office, but great food, great staff. They also offer catering, so check them out.
Very nice. All right, and I was encouraging you to go to Brookstone Financial's website, and there it is up on the screen, there at the bottom, retirement income planning with annuities. Now, this is a free download, right, Seth?
Yeah, it's a free report. Don't buy an annuity until you read this report, because, John, it's really, really important that people understand what they're committing to, you know, and here's the thing. When you buy an annuity, you're committing your money for a period of time, and that's really important. The bottom line is this, is the longer you commit your money to that insurance company, the more interest they're going to allow you to earn. And I like to put the time commitment in perspective with bonds. I mean, there's a lot of people probably watching the show right now that wouldn't think twice about going out and buying a 10, 15, 20-year maturity bond. To where, on the other hand, when you mention an annuity with a 5 or 10 or 15-year surrender charge or surrender penalty, they say, oh my gosh, I'm not going to tie my money up. But, you know, here's an environment where it's safety of principle, and you don't bear the interest rate risk, and the returns are going to be very similar to that you're seeing in the bond market. But again, the fact that you don't bear the interest rate risk, that's the very important component right now.
And
that's
it's a free download, and I'm looking at this, and it's really a quick read. So you're saying just be educated before you jump in, right?
Yeah, make an educated decision. That's critical. You know, really educate yourself before you make such a large financial decision or commitment.
Folks, if you like his style, and I certainly do, Seth Stewart, Brookstone Financial, give them a call. I want to talk a little bit about the process. If folks out there are interested and they're saying, I really don't understand all the variables, I think you're very good at really explaining things, you know, without I said, getting too deep into it. But what would be the first step? They call you, and do you meet with them or one of your professionals?
Yeah, so I'm going to be the first one to meet with you. All right, face-to-face, complimentary consultation. We're going to determine at that point if we feel like we can bring value to your overall situation. And, you know, at that point, we'll determine if it's a good fit moving forward. We'll probably suggest that you come back in for a follow-up or a second appointment so we can make some recommendations, because obviously it's going to take us a little time to dig through all the information and find out where you're currently at to see what type of positive recommendations we could make to you.
And if you'd like to do it in a more casual environment, then you can go to one of these events and say, hey, let's just meet some people and check out the information that's being offered.
Yeah, and John, here's something else I got to mention. Okay, I mentioned earlier, we do a lot of client events throughout the year, and people ask us all the time about referrals. They say, hey, can you give me the name of someone that you work with right now? And unfortunately, in the securities business, we're not allowed to give direct referrals, but here's what we tell them. We always encourage them to come to one of our client events. Maybe it's the Christmas party. That was a couple months ago. We always do the Louisville Zoo. We typically do several events throughout the year. They always, never fails, John. They always see people they know. I actually had a new client at our Christmas party this past year. They said, you know, the table behind me was one of my neighbors, and the table next to us was another neighbor farther down the street. So they had no idea.
That's good. And word of mouth is a good thing. It's a small community, but I think folks here, do you find this environment to be different, this region of the country? Are we considered more conservative, or any more, is it more of a global economy and people are different? Everyone's an individual.
Well, I think ultimately for us it comes down to the demographic or our target market and what we do best, and that's retirement income planning. And in retirement, we talked about at the beginning of the show why it's so important to protect and preserve principal in retirement, because you don't want to go to an account when the value's down and start withdrawing. So that's why I say, you know, with our clients, they probably lean toward the very conservative side because of that fact. And maybe you're watching, you're saying, well, wait a minute, Seth, I'm never going to need to really take money out of my account. If you have an IRA, a qualified retirement account, whether you need the money or not, your favorite uncle, your partner in that account, Uncle Sam, is going to force you to take distributions at 70.5. So, you know, you want to avoid that negative sequence of return possibility we were talking about earlier.
So that's my question with the free download. And again, go to the website there, get this free download if you're thinking about annuities. Will it explain the difference in, like we've talked about fixed annuities, we talked about this kind of hybrid annuity. Will it explain the difference here, Seth?
It does. It talks about the difference, and more importantly, it talks about the fees, and you really have to be very conscious of the fees that you're paying. And if we could go back to this annuity graphic I had on the iPad here, I'd like to explain, you know, a lot of people in our industry say that there's no fees in annuities. Well, here's a fee, John. If they're only allowing me to get a portion of the upside, that spread between what's called the cap rate and what the annuity actually returns, you know, call it what you want, but in my book, I call that a fee. So, you know, a lot of people in our business say, oh, these fixed annuities have no fees. I mean, it is what it is. That's how they make money, and that you have to be transparent.
Okay, and speaking of transparency, let's talk a little bit about how Brookstone Financial makes money. You've always said, John, I am transparent. How do you guys make money?
And really, it depends on what capacity we're operating in. As I mentioned, we have a fee-based registered investment advisory license. We have a broker license, so if you're into stocks and bonds and mutual fund trading, we can do that as well. We also have an insurance license. So I would say that, John, most of our clients operate with us on a fee-based arrangement. But there again, though, it's about transparency. The annuity world, those are commissionable products, and it's important to understand how people get paid and when they get paid in this industry.
All right. Offices, again, let's throw them up on the screen. Brookstone Financial, here's the office, and there is one near you. And if you would, you guys are expanding very quickly. I'm looking at let me throw the list of the offices up here. There we go. And if you would tell everyone, one of those is close to you, right?
Yeah, currently in Louisville, Jeffersonville, Madison, Jasper. We're probably going to be heading out to Evansville here shortly as well. So just kind of following the river, right? Following the Ohio.
All right. Problem solving is what it's all about, folks. So your roadmap to retirement with Brookstone Financial. It is a different approach. How did this come about? Did you see a niche there and said, you know, instead of offering just select products, let's offer it all and make it fit and really, like you said, solve problems?
Well, I've had a lot of clients comment to us. They said, you know, Seth, I love working with you guys because it's a one-stop shop. You know, when it came time to select my Medicare supplements or whether or not I elect Social Security, I knew where to go. I didn't have to search through the phone book or search on the internet because I knew I could trust you guys. So it's a one-stop shop, but there again, John, we really focus on the distribution retirement planning for pre-retirees and retirees, and that's our specialty at Brookstone Financial.
All right, let's show you. Again, we have a big commercial real estate announcement. We'd like you to get involved. And how does this work exactly, Seth? They get in on the call. No, there's no obligation.
No obligation, no cost. Just go to the website to register for the call. You do have to register for the call. It's a 10-minute call, quick update, exciting announcement, but it actually, like I mentioned earlier, John, it involves a very large large piece of commercial real estate right in the heart of downtown Louisville. So everyone will know where this building is that this portfolio is actually acquiring. So
I knew you guys, you're interested in healthcare facilities.
Yeah.
And you said the entertainment industry is also something to keep an eye on, right?
Yeah, hospitality, because they can fluctuate their nightly rates to combat inflation. We also have this IRA legacy planning workshop coming up. I mean, this is a great opportunity to understand the new IRA rules and learn more about efficiently and effectively transferring your wealth or what's left to the next generation. Because let me tell you something, if you don't do any planning, Uncle Sam may be the largest beneficiary of your accounts. So Kingfish Restaurant, March 12th, March 17th, and Clifty Falls in March 5th and March 10th. Give us a call to RSVP.
And you love your Uncle Sam, but you'd rather leave it to one of your kids. All right, we'll be right back. More with Brookstone Financial. We'll have a winner coming up next on Wave 3 Listens. And once again, Seth Stewart has your weekly interest rate update.
Yeah, John, interest rates are looking good at Brookstone Financial. FDIC insured money markets at 0.80. That's a great rate. 3-year fixed annuities at 2%, 5-year fixed annuities at 3.25, and the 1 to 5 year maturity bonds, those yields speak for